Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 13th. Hope you guys are having a great day so far. Hey, we got a couple economic data to report from the calendar, and we'll start off with important data here from the Small Business Index, the NFIB Small Index for the month of July. So in June, as you can see here, we had a 103.3 on their index and improved to 104.7. This is important primarily because this is a measurement of confidence in the small business index, and they do represent the largest job opportunities out there, that employment opportunities. So if they're feeling confident, that means they're going to hire more people. And the biggest concerns that they have right now, well, they see the economy slowing down, but they also look at the one reason we're not seeing more the initial jobless claims rise much further is because they simply don't want to lay people off because they can't find people. So the labor force out there is relatively small. The people out there looking for work or finding people to replace qualified applicants are hard to find. So that's why you'll see those down. And if these guys remain confident, that means jobs will remain strong. Let's kind of move on here. We got inflation data here from the Consumer Price Index for the month of July again. We got June was only went up month over month 0.1%, and from June to July, the forecast was calling for 0.3, and it came in at forecast. So this headline went from 1.6 year over year to 1.8% year over year. And then when you strip out food and energy, which can be quite volatile, we had something similar here. We had a 0.3% in June, month over month, and the forecast come 4.2%, and it went up 0.3%. And this one jumped from 2.1 to 2.2 in the overall. Now, CPI is important. It is on the consumer inflation. The Fed does look at this. However, their favorite or preferred measurement of inflation is the PCE, which we saw last week, and that's a much lower range. That went from 1.4 to 1.6 year over year core, and that's kind of what they look at more at the core versus the headline number. And as you can see, the Fed's favorite, they want the target rate is at 2%, but when we're down to 1.6, we're still quite a ways from that with the PCE. However, of course, CPI, we're seeing that in that range. Let's jump ahead here to the headline news. Stock market is reversing today. Dow's actually up about over 400 so far this morning, and it has to do with tariffs. It was released that we may reverse course so much on the tariffs. On the $300 billion that was announced to kick in September 1st, now maybe either just delayed till December 15th or maybe altogether removed. So they're going through there, maybe even picking out some that may not be included with that. And if it does, it may be a very small amount of goods that could be affected by the 10% tariff. So stock market likes that quite a bit, and we'll see, of course, how China responds. But the investors like that, think that's obviously positive news. Also, in the positive news is that the higher ups between negotiations announced that they're planning to meet within the next 2 weeks, so that to continue the progress on our talks. And then, last but not least, of course, they're kind of keeping an eye on Hong Kong. China's basically trying to crack down even further on the protesters there, and they want to make sure that hopefully it doesn't get out of hand, and this is kind of disrupting markets a bit as well. They're kind of keeping their eye on it. So let's see how this is playing out in the bond market. The bond market is down about 9 basis points, not enough to make a change in the pricing. So, and we're still kind of between the two ranges here. As you can see, this Fibonacci level here and this Fibonacci level here. And as you can see, the 25-day moving is rising upwards. So we're basically getting almost a double or triple float spurt, because as you can see, here's almost a double line here, plus the 25-day moving in. That will kind of keep it a little stronger for mortgage bonds and help us out a little bit. So mortgage bonds or interest rates will remain the same as what we saw yesterday. So as yields, they did climb up a little bit. We're up to about 1.68 right now after falling down and almost touching the line here. We didn't quite touch it, but we did drop a bit. But right now we're at about 1.68 on yields. Now this is something that they are keeping an eye on right now, because most of the inversions of the yields have occurred. However, one of the big ones, the 2-year and the 10-year have not, and that is very close to happening. We're about 3 basis points right now from that happening. That's very close. At one point, we're as much as 300 basis points. Now we're down to about 3. So this is slowly catching up, and that's pretty much the last inversion that has not occurred yet, and that is probably the more relevant one in terms of forecasting for a recession. And so of course investors are watching that one as well. So again, mortgage rates remain unchanged. If you guys are looking to buy, I am a loan officer, so please feel free to reach out to me. The best way to contact me is DM me or direct message me. The company I work with is CMG Financial. We do service all 50 states, so we can assist you wherever you are. We do offer jumbo. We do offer conventional, FHA, VA, USDA, like any other lender. However, we do carry more loans. So if you have special situations like you're a real estate investor, we do have loans specific for real estate investors. We do have loans like the bank statement that are especially great for self-employed borrowers. So instead of using tax returns, we use bank statements to help qualify. And then we got foreign national loans. And then we do have a couple other loans that are fantastic that are proprietary to just CMG. The all-in-one loan is a great loan for those who are looking to pay off the mortgage much quicker and save themselves a lot of money and gain more control over their mortgage. So this is a fantastic loan program in that respect. If you ever heard of the term velocity banking, this is essentially what this is. Home Funded is also a program that we offer for those who need assistance with their down payments with the conventional loans. This could be used for, it's a program that we set up, an account you could set up, and some people use it for their wedding registry, which is a great tool for that. We also use it for those who've gone through life-altering changes, like those who've gone through a divorce where one spouse keeps the house, the other one now has to look for another and need help with the down payment to buy another, and as well as those who face natural disasters. Like here in California, we have our fires, we have places that have hurricanes or tornadoes. So when you lose your home, now you're looking somewhere to move your family to gain another. We can help you out with the down payment on that as well. But of course, we got the first-time home buyers. That's probably the primary use for it, but we do have it can be used for others who are not first-time home buyers. So you guys, again, I hope to hear from you guys. You guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye-bye.